Good morning, ladies and gentlemen. Davis Martin here with you. Let's keep this short and sweet. Get the day started. Why short and sweet? All right, I'm expecting volume to lighten up ahead of the Fed announcement. So I'm going to try to make my trading short and sweet, nice and early in the morning. All right. Now, if you take a look at yesterday's price action, we pretty much had a descending um like a triangle of a day. All right, so let's go here. There we go. Yeah, not the neatest triangle in the world, but it got a little price action got a little odd yesterday. All right, and a lot of that I think was anticipation of Apple's earnings. But those are out of the way now, thank goodness. Now for the Fed, and that takes place today right around 2 Eastern. Okay, so Apple's earnings out of the way. Let's check on Apple intraday in case you missed it. They popped. All right. Now that might be like, oh my goodness, Apple's okay after declining, et cetera, et cetera, et cetera. Keep in mind, they already lost about shares already dropped 8% once when they lowered guidance or production once. I remember I was out taking my son to swim lessons and my phone blew up from CNBC saying that Apple shares were down 8%. And I was like, what the heck is going on over there? So looked into it. And sure enough, it wasn't pretty, but I think they may have done that intentionally in order to be able to beat earnings. Looks like they did. Now, you would think that would take markets higher. Remember, we're still awaiting earnings from Amazon, all right? People really care about that one. Now, let's take a look at a chart which caught my attention here. ALXN, Alexion Pharmaceuticals. I haven't traded this name in a long time, but but it's getting close to being actionable. All right, I have to zoom in here to get a closer look. Um, it needs to get over this 200-day simple moving average line. That's going to be step one. Why? So, and this is for a call option trade setup, by the way. It caught increasing volume yesterday. It needs to get over the 200-day simple moving average line. Why? Because that's such a tight stop loss. All right. So you have a lot of upside opportunity. It looks good to rise about $10 a share. So the options could make a killing on that run, right? But it's got to get above the 200-day simple moving average line resistance first so that it becomes old resistance becomes new support, and you can use it as a nice tight stop loss, work in some risk management. All right. So I've already been to the gym and back. I'm going to get down to business with my trade of the day, and I'll see you, ladies and gentlemen, shortly. Best of luck today.